Welcome to another day in the Matrix. I'm going to start this one off with a red pill from Immanuel Kant. If the truth shall kill them, let them die. So we're just going to get into some basic technical analysis today. Something that I drew up here was a parallel channel. Pretty much it was at the $42,000 level, which was our previous all-time high, and then support at the bottom when we reached that low around 29,000. And today I went ahead and extended that to the current high. And what we're seeing now is this heart line is making a lot of sense. So it's something that I wanted to get into a little bit because, as you can see, stuffed out by this heart line here. And then, as you can see, after we pumped above it, we saw support. And then now I think that this range is large enough to the point where it'll probably hold until we see our next exuberant move, which would be this one right here. If I adjusted this top to be at the top right here, you can see that it was getting resistance and then it came above it. So that would be the original way that I had it set, and both are great because you can see the heart line in this case makes a lot of sense, moving into this being our support at the bottom. Now, with that being said, if this breaks down below this line right here, we're looking for a touch at the bottom of this line, and that could go as low as 36,000. If it happens near the end of the month, around March 21st, we're looking at about 40,000, and that's possible. Again, March 21st, 21, that is Jesuit equals 21, and yep, our previous all-time high was on a 21 date, and I wouldn't be surprised. We've been seeing the theme of 12 and 21 coming up quite often, and it would be something that I would be prepared for. Now, we do need to take into consideration I'm going to shut off some of these indicators. We need to take into consideration our EMAs, which, as you can see right now, we're holding pretty well on this 21 EMA, but if we close today below it, I would see this coming down to this heart line again and finding support, and a potential dip below it into the 43, 42 range. Let's get our 55 EMA because that's very important. Right now, you could see this 55 EMA. It played as a really nice support back here at the bottom of this parallel channel. And now you could see it's in this precarious sort of middle zone of this channel. So we'll just have to see the way that this plays out. But I do believe that the 55 is going to be a strong hold. If the 55 gets if we get a daily close below this 55, I'm looking to the bottom of this channel. And I think that's where our main support would be. So is there a possibility of a $37,000, $38,000 Bitcoin? Sure. Why not? Why not? I know a lot of people don't want to hear that, but we do have to remember that the 21 weekly EMA is now sitting at 32,300. So until that starts getting higher, you just kind of have to deal with it. These bullish opportunities are in the cards. So like I said, I just want to keep this simple today. I was looking at this channel. I really like the way this channel looks and the formation of it, and how if you get it up towards this top right, if you get this up to this top right here, it's showing me something really interesting. Another thing that we could do is we could bring this down to like there and see how that channel's forming. And that's another opportunity for our analysis, something like this. And that structure would include most of this previous price movement, so that's totally fine as well. And this is showing us that we could play in this range for quite a while. Looking at the 60,000 70,000 in March and still be within this channel in a very healthy way. So I'm going to leave this up like this for now. Whenever we fall out of this channel, we'll call that the spring action in Wyckoff, which is pretty much occurring every single time we have a reaccumulation. And there would be the opportunity for that 42, 43,000 before a continuation of the upside. And I did mention in the previous video that this 43 could absolutely be the bottom. We don't know. Nobody knows. One thing that I will warn you guys against is if you ever hear someone, especially on YouTube, telling you exactly as predicted, unsubscribe. That's becoming my least favorite mentality, is when somebody says exactly as predicted. No one gives a fuck about your predictions. Just stop being a child. Help people. When you watch content from anyone, including me, I don't know exactly what's going to happen. Nobody does. And that's why I've started to get into the Gematria, because I've noticed that that plays a more important role in price action than some of the crazy TA that I see. And I've let you guys know before, like, anything could happen in these markets, and it's really, really important that you keep an open mind and don't, like, just join the cult of whatever is going on out there. These people saying exactly as predicted. Sure, it's you predicted it. It's just very frustrating for someone like me who does this and tries to help people, and I get this cult unlearning that I have to do for people because they're so fixated on these predictions that people make, and they don't understand that this market is controlled by algorithms to push it to certain prices on certain dates at certain times because of certain moon cycles and whatever the fuck. The TA is the icing on the cake, but it's not the most important thing. That's what I'm learning. So anyways, I brought up this before in a couple videos ago, discussing how we could have another resistance line forming. It could be more shallow. I highly doubt it's going to be that shallow. I think it'll be something similar to this, where near the end of the month we get a breakout. So it'll be coming up to this eventually, maybe in the beginning of March, come up to 53K, fail, come back down into the middle of March, and then break out of this eventually. And although pattern trading is not my favorite, I do use some because I've seen them work time and time again, and it might just be because of the leverage traders getting really caught up in patterns. And it's sort of the same thing with bearish and bullish divergence on RSI. When you see the divergences, everyone talks about them, and when everyone talks about them in the short term, it makes them come to life because the sentiment is being transformed by these influencers on YouTube. That's where most people are learning their trading signals. They're getting them off of YouTubers and Telegram groups. And when enough people with a big enough following have a similar mindset, that market sentiment will go according to plan. So the market makers know how to push the price to get it as bullish or bearish as necessary to tip the scales into the retail through these influencers that are essentially just agents, because most of them don't really have anyone's best interest. They're typically just out there to manipulate sentiment, and the New World Order knows that. That's why they give us social media for free. They have those people do the dirty work for them. So what I'm seeing here is really healthy. We needed to have a pullback, and MACD crossed bearish. We're heading to the downside, and there is a divergence here on RSI, as you can see. January 7th, having an RSI that was pretty overheated, somewhere in the 90s. And then we're seeing a lower RSI when we hit the $58,000 range. And that is bearish divergence. You have higher prices, lower RSI. And that's also another thing that's not super critical for people to get caught up in, because a lot of the time these divergences don't play out, especially on shorter time frames like the 4 hour chart or smaller, but sometimes they do work out. And it's just really important to know that you can't just pick one thing. You have to have confluence in many other things. Um, for those that were paying attention to the 3 day and 2 day, or even, for instance, the weekly, sorry for the messy chart, but if you look at this weekly and you pull up the Bollinger Bands, you'll see that we closed this week here extremely outside of these Bollinger Bands, and that is a continuation. So why did we have this dumpathon? You know what I'm saying? And it was probably because it was a 222 date numerology, and that's a very important number. Technicals aside, I mean, how the hell are you going to have so many bullish record closes and then have such a bearish response when the RSI wasn't even overheated on the daily when that happened? And as you can see, they push the price to whatever the number is on the date that's necessary. Like I showed everyone on February 21st, the high on most charts was 58,350, and 58,350 equals 21. And that happened on the 21st day of February in the year 2021, in the 21st century. And this 21 theme keeps coming back to the Jesuits. So keep that in mind. I don't think I'm going to get too much into any other cryptos. This is just a YouTube video after all. I run a mastermind. If anyone wants to get involved in that, I have private mastermind videos where I go over technical analysis more in depth. Perhaps if I see some information come around on some decodes, we'll do some gematria to discuss that. But until then, see you guys in the next one.